All right, everybody. Good evening, good morning, good afternoon, wherever you're watching. So this is the order block strategy plus the fees RR trade strategy that will work for you. I lie you not. You see, one of the reasons that a lot of people struggle with trading is because they don't really have an edge, which is the first thing. A lot of people struggle with psychological issues in trading, but I tell you, if your strategy is doing well, then psychology and risk management is the least of your worries. You get what I'm saying? The reason why you are becoming emotional, you are getting your psychology is affected is because your strategy is having a question mark. You get what I'm saying? So if you can fix this, just watch this video and I promise you it's going to be helpful. All right? So make sure that you have turned on your post notification. Make sure you have subscribed. All right? Make sure you have subscribed to this channel so that you'll be able to get videos like this. So without wasting much of the time, let's get into the video. Now, this is the order block strategy that works. All right? Now, for my order block, there are 4 things I want to really pay attention to. For my order block strategy, there are 4 things, like what may I want to see for my high probability A plus for my A plus order block, for my A plus order blocks formula. My A plus order block formula, there are 4 things. Though in my advanced class there are 5 things I taught. I will be explaining about my advanced class later. But for my order block, there are 4 things I will want to teach you to focus on. The first is that you want to see a break of structure or a change of character. All right? You want to see a break of structure or a change of character because you want to be able to answer 3 questions. You want to be able to understand market structure. You want to be able to understand where we call the liquidity area. You want to understand your point of interest. So around understanding the market structure is the part where you focus on your break of structure. You want to know, did the market break structure upward or did it break structure downward? All right, this is your break of structure. Did the market break structure upward or did it break structure downward? Whereby it comes like this, did it break structure downward? You get what I'm saying? So once you are able to solve that first part, that market structure part of the strategy has been sorted out. So the next part of the strategy which you need to focus on is for the A plus order block. Remember, we are still talking about order block. The next thing I want to focus on is that did the order block lead to the break of structure, a change of character? The second is that does the order block has a fair value gap or imbalance? Now, I used to tell people, I will always trade an order block that have all this fair value gap and imbalance. In the sense that if a market breaks structure, the way and manner in which the market breaks structure is important. This is your order block you are interested to buy from. But around this area, you want to see the type of candlestick that formed around here before the market broke structure. I hope they are voluminous candles, they are big momentum candles. That will tell you that around this order block there is large volume there. You get what I'm saying? So the size of the candles you will find there will let you know if this order block is going to hold. But when you see another block forms and they eventually broke structure, but the kind of candles that forms, the market was just struggling. Let's say the market did something like this, but when it was about to break this structure, it was just doing something like this, just small movement here. That alone will tell me that the volume that is here is not really much. Though there's a chance that market might come back there and market will buy upward, but I don't trust other blocks like that. You get what I'm saying? So, but other blocks that break structures are the ones that break structure, and also they have fair value gap. Fair value gap will tell you that there is a large volume there. All right. When you see the size of the candle that formed immediately after the other block, when you see large momentum candles, it lets you know that there is, aside from the space that people always want to see, you want to see the gap between the first and the third candle. I understand, but the most accurate is this one. What I want to see is that I hope my order block is unmitigated, meaning that I hope my order block is fresh. That's what I want to see. I want to be sure that my order block is fresh. Hope market has not tapped it. If market has tapped it, it means that market has picked all the people that's picked all the orders that are waiting there. You get what I'm saying? In the sense that, let's say this is my order block, market broke structure, and I've marked out my order block. It means that if market eventually has come here and then went up, it means that this order block has now been mitigated. So I don't expect to buy from here. I might be looking for another order block again, maybe around here or something else, but this one has been mitigated. So mitigation means that market has picked the orders that are waiting there. So if you now go and be saying you want to be buying from a mitigated point, most times you are going to be wasting your time. And then the fourth thing I want to pay attention is that the presence of liquidity. All right, for this video, the only liquidity we are going to pay attention to is what we call inducement. All right, if you want to learn about liquidity, I'm going to make a video. I'll just drop that on the comment section. I'm going to know if I'm going to make a video on liquidity. So liquidity, all right, liquidity are areas where price is interested to go, because liquidity is money. So when there is money somewhere, no wise businessman will see money somewhere and will not want to go and put there. So liquidity just hangs around different areas in the market. That is one of the reasons that we are sure that our market is going to go to our direction, because why? There's the presence of liquidity. These 4 things make sure that you have them in mind. Let's do a live example. I'm going to be doing a sell example and a buy example. I have a sell example here on Euro USD. All right, on Euro USD. Now, the first thing is you want to identify the trend of this market. Obviously, this is a downtrend, because looking at the structure of this market, you can tell that this market came here, got here, then it's trying to go up, but then it eventually came here. So the last and most obvious break of structure we can find is this one that happened here. So this is our last external break of structure. Every other break of structure you find there are internal ones. All right, so me, I like paying attention to external points. So the moment I mark out the break of structure, this area has already told us the intent of price, that price is intending to sell. Then the next thing, I look for my order block. Remember those 4 points I listed out? All right, I look for my order block. So my order block for this scenario, this is a bearish move. So my order block, I'm going to be marking my bearish order block. And for this scenario, my order block is the last buy candle, my last bullish candle. All right, before the price started selling downwards. This is my order block. And you see, I explained many of these criteria. We are going to check it again. Now, this is our order block. Let's begin to check. The order block, it led to a break of structure, which is number 1. The order block has a fair value gap. Look at the size of the candles that formed after the order block. See this big candle here? It's indicating the presence of a large volume of sellers. So this alone tells us that this market is going to sell. Now, the third point is that the order block must be unmitigated. Now, I know a lot of you might say that this is mitigated, all right, but it is not mitigated. Sometimes if you want to be sure that your order block is mitigated or not, you have to check the line chart, all right? Check the line chart. If you check from the line chart, you will see that this is actually where your liquidity area is. That was just a weak manipulation. My price has not mitigated it yet. I've just given you guys some advanced stuff, all right? So just pay attention to this. So our order block has not been mitigated. So let me change it back to candlestick. So then our liquidity is this. The fourth point is this liquidity, which is this part here. All right. So you can see that the order block met all the 4 criteria. Now remember this video, I said something. I said that the purpose of this video is that I want to teach you an order block strategy that works, and also when you mix it with a fixed 1 to 3 risk to reward, a fixed risk to reward ratio, whereby you don't become greedy, don't target 1 to 10. I don't know. If you want to be a trader that want to last in trading, you have to have a fixed system whereby you will be consistent with it. That way you can be able to track your progress. Somebody that is trading 1 to 3 today, trading 1 to 10 next tomorrow, 1 to 7 the next day, 1 to 4, you will not be able to monitor and track your progress. Because why? You don't have a balanced and a consistent risk to reward. But if you have something like this, I tell you, it's going to really help you. So now we have seen this thing, then let's see how it's going to play out. We just put our entry around our order block, put our stop loss just a little bit above our order block, and then you target a 1 to 3 risk to reward. So even if it goes beyond 1 to 3, you don't be this alone will help you. All right. So let's see how it actually went. Okay. And then very good. You can see that the price has hit our target. It has hit our TP. Have a fixed risk to reward. Have a fixed risk to reward. This alone will help you to be able to monitor your progress. You can see how easy and how smooth it is. All right. Now let's make another example. Let's look for a buy scenario. You see, I know some of you might be saying it's not as easy as this, but if you define your system and say that this is what I want to see, I'm not going to take this trade unless I see all these points are being met. I tell you, you are going to be very, very profitable. All right. All right, before I show the buy example, let me quickly introduce my advanced course. All right, so I have a advanced SMC course which is going to help you to become profitable. All right, it is going to help you to become profitable. I have asked students who have bought houses, cars, and some of them are even like the achievement they get alone is so. I'm not painting all these things to you so that will not change that will not be the motive why you are learning. You get what I'm saying? The goal is to learn first, then earning comes after. So my advanced SMC course is going to help you. I have everything detailed from the basic to advanced, and also there are a lot of things you will get. So advanced smart money concept, it works in all the market. It works in Forex, it works in the crypto market, it works in synthetic indices market. All right, so what are the things you are going to get when you pay just $100? Not much. All right, so you get access to my recorded video course with a live class after you have finished watching the videos. All right, you will get access to my recorded videos, and we are going to have a live class, one-on-one class after you have watched the video, so that we are going to analyze chart together. Then the second is that you are going to have access to me, and I will guide you to your profitable. You get what I'm saying? I'm not just going to give you access to my video course. I'm just also going to make sure that I'm holding you by your hand till you become profitable. And the third thing is that you're going to have lifetime access to my inner cycle. And my inner cycle is filled with my advanced students that I've taught personally. They are doing well. All right. And the reason why it is important is because I know that trading is very, very difficult. So it will be very, very stressful when you are doing it alone. So I have a lot of traders who are doing well already. So you imagine having those kind of people in your community, and then you are sharing ideas together. It's going to help you. All right. The next thing is that you're going to have weekly chart breakdown. Though it's been a while I did that, but I'm resuming fully this year, because even my videos I'm resuming fully this year. We're going to be having weekly chart breakdown every weekend, so to prepare against the next week, and also to check the trade that we have taken the previous week. All right. So, and also you're going to have access to my library. The library contains forex materials, crypto materials, both synthetic indices material. Is going to help you. Over 400 paid courses. If you check, there are some that are worth a big amount. Also, you have access to my trading journal template. All right, so if you're interested, just click the link on the description. You're going to get access to get the videos, to make payment, and then get access to the course. All right, let's continue. Now we have a buy example on USD/JPY. This is a buy example on USD/JPY. We are going to take two trades on this one now, and let's see. Remember the same thing I thought about. This, we have seen our break of structure, which is the first thing. We want to see a break of structure. The reason why break of structure is important is because you want to know the direction of the market. So the market breaking structure upward is telling you that the buyers are in charge. So you don't want to trade against the buyers. The next thing, mark out your order block. Mark out your order block. All right, you have marked out your order block, and then what else? This is your liquidity. This is your liquidity. This inducement is your inducement around here. And then what else? And you could see how price just moved. Imagine, look at how price moved. The buyers were so in charge. They don't even allow sellers to take a breathing space. And then you want to check if this point now, look at this. We want to check if this market around this point, if, where is the pencil? Let me just do this. You want to check if the price has been mitigated around here. All right. The same thing, go and check that line tool I told you. Check the line too. You can see it has not been mitigated. So meaning that price will still come back there. All right. Price will still come back there. So the next thing, I'm going to place my buy order around here, and then put my stop loss just a little bit below this week. My entry, and then target a 1 to 3. 1 to 3 risk to reward. And then I'm done. Just 1 to 3. And I think I'm even going to take like 2 trades on this. And then wait for the price to come there, and then you can see price has hit our entry, and price has hit the target. Price has hit the target. Now, I think we even have another opportunity to be able to enter another buy. Yes, we still have another opportunity to open another buy. Looking at this from here like this now, you could find another block here, indicating that this is a very, very good opportunity for price to even buy again from. And then, applying the same principles I just taught now. Target a 1 to 3. The reason is because don't forget the principles I taught. There is a break of structure here, apply every other things there. All right, and then you could see that price eventually came there. Okay, I think on this one I made a mistake. I actually love using invalidation point as my stop loss. I will teach that in the next video. All right, this place is my invalidation point. This week here I made a mistake. I should have drawn my stop loss to be around this invalidation point, and then you target a 1 to 3. All right, I took this trade on I think I shared this trade with my VIP signal group. So this trade, yes, I was not stopped out on this trade. So imagine having to just have a fixed risk to reward, and then that's all. In fact, I'm still expecting a buy. All right, I'm expecting a buy. I'm expecting the price to come back, because I still have another buy I'm waiting for the price to come back around here, this same area here, because there's another block here, a break of structure. This is it here. This is my inducement. All right, but before that, I think there is something that I am seeing here. Following everything that you have been taught, this is your break of structure. This is your break of structure. All right, I think this is another block area around here. Let me see if the price will come and engineer a liquidity. That's cool. Yes. The same thing, I want you to check this. You could see that this point here that came, this low here that came, that did not mitigate it, it will serve as the engineered liquidity. I'm going to make a video on engineered liquidity, which is going to be the second video I'm going to be dropping this January. So I think I'm going to make a video on that. So imagine having something like this, and then you enter a buy. In fact, on this one again, target the 1 to 3. The 1 to 3. The 1 to 3. I think you'll be able to get at least something good from that too again. Okay, I think the price is currently in today. Today is 2nd of January. Price is already moving, so we are expecting the buy to at least get to a 1 to 3. So imagine just how many trades you'll be able to secure once you have a proven system and a fixed risk to reward. You get what I'm saying? All right, I will see you in the next video. Please make sure that you like, you share, and also you make sure you subscribe and turn on the post notification so that when a new video drops, you'll be the first that will be alerted. All right, see you.